Okay, so it's 11 a.m. I think we are ready to start. I know both Albert and Paul are on the line, and I can see a number of participants already registered and listening in. Good morning. My name is CPA Marco Mona. I'm Director of Standards and Regulation at the Institute of Certified Public Accountants of Uganda. We're very excited to have you today on our webinar on the theme of leadership, the leadership role of the CFO and how they bring value through the COVID-19 crisis. We have a very exciting lineup of speakers, panelists, who I'll be introducing very shortly as we get along with the webinar. This is probably the third of a series of webinars that we've been running, and there's so many others coming through. So I encourage you to look out for our communication via various platforms, as well as on our website, where we'll keep updating you on upcoming events. This webinar today, as I mentioned, is looking at the role of CFOs and the finance function, and really driving the point that CFOs and the finance function must step up to provide leadership to the various organizations that you work for, to ensure that your organization stay afloat through this period. So our objective for this session is that by the end of the webinar, you should be able to identify and apply some, and also be able to appreciate the various ways in which you can manage through the crisis, and you will hopefully practical tips from the panelists on how to do so. But we also want to take stock of the state of business today in Uganda, and really try to see how we chart a way forward. So to sort of set the scene and get the discussion, maybe before I do that, some few housekeeping points to make. One is that you will earn CPD credit for full attendance of this webinar. You should be able to get your 2 hours of CPD credit. Two, we encourage you to send through your questions using the Q&A function, so that yourself and the other attendees on the webinar can be able to see the question. So we will be picking the questions from the Q&A module function. So don't use the chat, kindly use the Q&A function. The program will run as follows. We'll have a presentation from Albert, CPA Dr. Albert Tete, who will take us through for about 30 minutes. That will be followed by CPA Paul Mwanga for another 30 minutes, and then we'll use the rest of the time to receive your questions and have responses to them. As already indicated, our preference is to get the questions through the Q&A function. That way we can be a bit more efficient and have the panelists respond to them. If time allows, and only if time allows, we will receive your questions directly, and to do so, we will ask that you raise your hand using the platform. I hope you know how to navigate that, and I'll pick on you to raise the questions. Both, please mute yourselves as you enter this webinar to avoid any distraction for the panelists and the rest of the attendees. Okay, so with those few words, and I see our attendees are coming through more and more, I thought I would start with sort of set the scene. So this is where we start. We have a crisis at our hands. As at 10 a.m. this morning when I checked, this is what the statistics look like. There are more than 3.8 million confirmed cases across the world, 1.2 million of those in the US, and more than 269,000 deaths across the world. So very, very, very big numbers there. Back home in Uganda, this is what our Ministry of Health is reporting. We have 101 confirmed cases, 55 recoveries, and 0 confirmed deaths. So clearly we are doing pretty well as compared to most. We also, and you will be receiving the report on the poll that we conducted within the next day or two. Our standards and technical support department is finalizing the results of the survey. So I thought I would just give you a sneak peek into some of the responses that we got. So we polled our members, got more than 150 responses. That for a majority of you, your biggest concern right now, or the biggest concern for organizations, is cash flow. 63% of you are very worried about that. You're also quite worried about the length of the downturn. You certainly do not know how long this whole situation will last. But you're also keeping an eye out on government's response to the crisis, policy and legislative responses. We asked you as well what you you thought about your revenue projection for the year, and a majority of you, I think up to 17% of you, indicated that you projecting more than 50% for the year for 2020, and I think more than 80% of you expected some form of reduction between 10 to 50%. We further asked you what you were doing to respond to the situation. And this is what you told us, that you were scaling back for investment. You were also renegotiating existing contracts and reviewing them, and also keenly looking at your liquidity position as well. So those are some of the strategies that you indicated to us that you were implementing. I think one of the last questions that we asked you was what you were doing in terms of recovery. Had you started actively planning for recovery? Were you thinking post COVID-19 crisis or post COVID-19 lockdown and things like that? You told us that 50%, more than 50% of you were starting to do so. About 24% of you had not yet started planning. You were still dealing with the situation right now. And then finally, about 22% of you were not yet sure, and understandably so. The situation is very fluid, things keep changing day to day. So we need to make sense of this whole situation that we have before us. And we have two excellent speakers who are going to take us to today's discussion. First off is CPA Dr. Albert Kotete, who has more than 28 years of with experience in accounting, audit, and consulting. He worked for 10 years with PwC before and later joined Stanbic Bank, where he was finance manager and later on head of audit before taking on a regional role as senior manager strategic initiatives in South Africa. He is an IT assurance and governance specialist. His role at the firm is senior partner and managing partner, Jason Richards. His role at the firm is to provide leadership to a team of professionals conducting external audits, and he is a member of the institute and also participates actively in research in various areas of interest. Our second panelist is CPA Paul Mwanga. Paul has worked for more than 30 years in finance, IT, general management, and teaching. He's contributed to implementation of systems and turnaround of a number of institutions. He has a bachelor's degree in statistics from Makerere University and MBA from ISAMI, and he's a qualified accountant, qualified in 2000, ICSA in 2005, and several IT certifications as well. He's a member of the institute. He's held various senior positions at Chagalani Coffee Limited, at First Insurance Company Limited, Finca Ghana Limited, Nakasero Hospital, where he was CFO. He was also a practitioner at PMC and Associates, and currently is the managing director of Excel Insurance Company Limited. So, ladies and gentlemen, those are your panelists for today, and it's now my pleasure and honor to invite CPA Dr. Albert Otete to lead us into today's discussion. Albert, over to you.
Hello, good morning, everyone. I'm glad to be invited by the Institute of Certified Public Accountants to talk and share about the leadership role of the CFO and the finance function. And we'll try to go through the presentation quickly, such that we can answer as many questions as possible, which people are grappling with their respective offices and organizations. So I'll first share a screen. I don't know whether all of you will be able to see it. Is everyone seeing the mark? Are you seeing the screen?
Yes, Albert, I can see your screen. Yes.
Hello? Hello?
It's very clear. Yes, Albert, your screen is clear. Okay. We can see it.
I believe okay. So we'll just start with the timeline of the COVID-19. I'm just indicating there that this virus initially affected the Chinese province, and it was quietly affecting them until when the problem came in mid-January. So that's when we started to hear about those cases, and they are becoming common on TV and social media. So in Africa, that's when had their first case in Egypt, and of course other countries followed. I think in Algeria and Nigeria. Then on 11th of March, that's when the global pandemic. So it's therefore that many countries decide to implement lockdown measures to slow the spread of the virus, and that.
Albert, we seem to have lost you. Okay, I think you're back now. You're muted, Albert. Please unmute.
Okay.
Yes.
So is this
perfect? Okay. So now I think you'll need to share your screen again.
Yeah.
Yes.
Is it
yes,
there now?
We can see it now. Yes, Lynn.
Okay. So from 11th of March, from the graph, you can see that before that, before 11th of March, there was a lot of volatility in terms of the confirmed cases. They were going up, down. But I think you can see from 11th of March, which is like two months ago, the number of confirmed cases seems to be going down in terms of percentage wise. But as you rightly said, we are almost reaching 4 million confirmed cases now. I think by tomorrow, probably it will be 4 million. So it is increasing by 1 million every 2 weeks. But you can see there that the rate of daily increase in cases is % per day. This is per day. So if you had 100 cases yesterday, you now have 106 the next day. So that is quite very fast. So the idea is that flattening the curve requires these percentages to come to almost 0 or 1%. Now, the next one is about the confirmed cases, recoveries, and death. So this graph is trying to show us that a number of people recover from COVID. That's almost 60% recover, actually. Then only 7% actually die. So now this is the kind of information now which the governments need to look at. We need to look at the active cases. So Mark, you just said there that Uganda has 101 confirmed cases, but 55 have recovered. So definitely these 55 have gone home. So the biggest worry should be the ones who are still in hospital. They're actually a strain on the health facilities. So World Health Organization has said pandemic is far from over. So indeed, many organizations when to end. So let's quickly go to impact of pandemic. Lockdown measures have paralyzed many organizations. I believe all the people who are attending this seminar have been affected one way or another, including government itself. And then international passenger travel is on standstill with most aircraft on ground. So even if you wanted to travel somewhere, you can't travel. Regional borders have been closed to passengers. I know the ICPAU normally has a seminar in May. Now we can't go there. Supply chains, both internal and foreign, have been subdued. Sometimes, if you are not an essential service provider, you are not supposed to move. Transport, curtailed. Employees have been asked to work from home, if that is possible. So I think CFOs who are listening will be able to know that if their staff are at home, are they able to work? Companies have started following and laying off some employees. This is where some of them are put on unpaid leave, and then some are even getting pay cuts. Schools, of course, closed. Social distancing is the new buzzword. digital meetings like this one have blossomed. Indeed, you may find that some people have had very many of these seminars, more than they have had in the last, while some costs to slow down spread have increased. Global and country economies have slowed down and on brink of recession. So not only Uganda, but many countries. So now we go quickly to the next two slides, talking about how do CFOs and finance bring value. So definitely we are cognizant that a CFO is more of a role than a title. So you may find people are using different titles in their respective organizations. Talking about someone who is leading the finance function, which is very critical for any organization, because every organization needs money to be able to achieve its objectives, which it was set up, whether it is government, department, NGO, a business, a small manufacturing, whatever it is. So finance function is there to preserve and grow financial health of the organization. So we also cognizant that definitely these tips and the guidelines, some of them may not apply to some organizations, but it's good to learn in case maybe in future you are changing a job, you can be able to go with these same tips. So we are saying here that CFOs must develop a stakeholder matrix and generate communication plan. There are so many stakeholders when you're a CFO. Most of them, of course, will be internal because they need money. So you need to map all of them. But then there are also suppliers, the people who supply the organization, they need to be paid. There are customers, of course, you need to collect from them. There are shareholders, regulators. So we are saying, depending on your organization, you identify the stakeholders and communicate to them, either by email or whatever way you need to communicate. Then CFOs must emphasize survival of the organization. I think that one's already known. Some organizations have been reported to have collapsed. We are yet to get the actual figures. CFO should be worried about financial anemia and its implications. This is where the organization is running out of cash. And now that could lead to a spiraling problem in terms of trying to look for loans and also inability to pay suppliers. And you can also become bankrupt or even undergo receivership. CFOs must maintain payment system. This is very important because as people are on lockdown, they still need payments. But CFOs have typically, the finance function relies on hard copy documents to make payments, rely on hard copy documents for people to approve, to sign off. So now with lockdown, how are these things going to be done? So CFO must innovate and ensure that these payments can continue. Should maintain cash budget. Cash is very important at this stage. So daily budget, weekly budget is very important, where you look at how much cash is coming in and how much is going out. Then you must be having a positive balance at the end of every day or every week. If it is turning towards negative, what are the options? You can call up and utilize lines of credit with your banks. You can sign where you have been given 3 months, 6 months. URA said you can pay later. NSF said you can pay later. Landlord also might be having some offer. So you can take up many as possible. So CFO should be able to put those in the budget. Of course, the budget for the year needs to be revised. Otherwise, then it is outdated and the CFO is using outdated information is not good. So how we shall be discussing maybe how that should be done. Then insight into the impact of COVID in the management accounts. This is important to be able to compare that this month there was lockdown. Let's say January was okay, February was okay, then March was impacted by how much, April was impacted by how much. So CFO should dig up this information so that he can communicate it to stakeholders. Then CFO should use data mining and analytics. Yeah, definitely this is important. It may not be something you are doing now, but you are supposed to look at your sales data, employee data, purchases, stock, and look at the patterns that are arising during COVID. And then you can maybe add value to the reporting, maybe for the future or even in the medium term. CFO should provide more information frequently, not monthly, but I think even weekly or even daily, especially that we have things to do with staff costs. A number of people have paid March, yet it was lockdown. Then April now has passed, it was also lockdown. Now May has started, so people are worried that staff costs are increasing. I mean, basically are being incurred, and yet revenue is not coming in. So CFOs should be able to provide information on how long can this situation be tolerated. We have seen that a number of organizations have written letters to employees talking about salary cuts. Others have reduced the number of staff. So most likely this information was provided by CFO. CFO is also to do risk assessment of the supply chain and mitigation measures. This one is talking about the disruption of supplies, especially if you are in manufacturing and you need to import or to get supplies from where trucks are stuck at the border, imported from China, Europe, America are also stuck. So now time to think about alternatives. Plan B, Plan C. Yes, present weekly dashboard. CFO should present weekly dashboard of key financial ratios. This is important because where things are turning to amber or red, then the MD or directors and other people, shareholders, need to be alerted in advance instead of being taken by surprise. Business. In the bank, you may find different type of ratios. In the manufacturing, it's different. In a retail business, it could also be different. But we are talking about maybe 6 key ratios. And then sector exposures means which of your stakeholders or customers are most affected. We know, for example, these seminars, we used to have them at Imperial Royal. Now, I don't know whether they have any business coming in. It's unlikely. So hotels have been affected. Of course, travel and tour agencies have been affected. Airline, of course. So if you have these exposures, you must highlight them for management decision. A CFO should lead the development of business resilience plan. This business resilience plan was not there before in many organizations. They had business continuity plan, which only took account of a disruption which might be isolated for that particular business. So like, let's say a building collapsed, then you can try to resume business in another building. But now this is now a global thing which has affected not only the organization, but even its supply chains. And then even further, government interventions have made the situation worse in terms of restricting travel. That business resilience plan might be new to many organizations, but the CFO can start the process and help them. This is to do with which have year end 31st December 2019. Some of them even have not completed the audits because it was still going on. So we are saying CFO should now look at post-balance sheet events arising from COVID and ensure that these are actually included
Albert, are you still there? We've lost your audio. Albert, can you hear me? We can see your screen, but we can't hear you. Okay, I think Albert is troubleshooting. He should come back in a second or so. Okay, we are waiting for Albert to reconnect, and then he should be able to carry on with his presentation. And once he's concluded, then we'll have CPA Paul Mwanga to also share his views and insights. In the meantime, Paul, can you hear me now?
Yes, I can, Mark.
Okay, perfect. I think you're having a little bit of trouble earlier, but thank you for coming through, and I think everything is now sorted. And we'll just give Albert a minute or so. If he's unable to connect, then we'll come to you, Paul, and then hear from Albert a little bit later.
Okay.
Yeah. Okay, I can't get over. It looks like Albert is still having challenges. So Paul, I'm going to invite you to take the stage. I'd already introduced you. I don't know if you were listening in at that point. I know you were having issues earlier. So for our participants, CPA Paul Mwanga is the managing director of Excel Insurance Company and has more than 30 years experience in the field of accounting, finance, and education. He was a teacher at some point in his career. So Paul, I think you take over right now, and I'll ask Peter, our IT, to load up your slides. Or if you're going to do it yourself, please go ahead.
Peter is going to help me, so I'll just ask him to
okay, I'm getting the slides ready. Yeah?
Perfect. Thank you, Peter.
Right.
Okay, so as Peter loads the slides, Paul, I believe you're listening through Albert's discussion. One of the last points he made was the importance of what he called a business resilience plan, and he was explaining that many organizations have a business continuity plan, which is premised on an event affecting only that organization. But what happens when there is an event affecting the entire world? He covered. You can have the floor.
Yes,
thank you.
Thank you very much, Peter. We can go to the next slide. Okay, so Thank you very much, Mark, for giving me the opportunity through ICPAU to speak to my colleagues during such a time. Hopefully, we may find ourselves that this may become the new norm. When I was thinking about this topic, I don't remember exactly where I got this lesson from. Either I was reading about it from a book or it was told to me from somebody. I couldn't recall immediately. Otherwise, I would have given the credit where it is due. And it says that to be successful, you need to think 2 steps above your current position. So as CFOs, we have the CEO above us and then the board after that. And you will find therefore that the challenge is never with the CFO or fellow heads of departments. It's more with your board, because every time you have a question from the CEO, you can always tell him, let me go and have a look at it. Or you can even tell him, okay, you know, this business is like this, because they have a very clear understanding of the business, and you can go into a little more details and a little more explaining where they will want to do. But you can appreciate that the board may be including people, one, who are non-executive and are therefore not involved in day-to-day activities, but also 2, do not have a lot of time to listen to your explanations and therefore want very clear, sharp answers with just the information they need. So if we just go to the next slide, I was demonstrating that. Peter, are you there? I was trying to say that we need to therefore get out of our comfort zones, and we should not just be seen as number crunchers. We are always hired. Every time you see an advert, we are looking for a CFO, then they say, oh, the CPA, a member of the CPA, qualified accountant, and so on. And so you're expected to be able to deal with the IFRSs, you're expected to deal with the financial statements, reporting at the end of the year, and the management accounts, and you should also be able to produce budgets and so on. But you find that we are doing that so much at the expense of so many other things. I was actually thinking about myself, and I think many other people are doing that. We concentrate more on our deadlines than on the other activities. So we miss a lot of networking activities. If you look at yourself as a CFO, how many times have you failed, say, to attend a CPD seminar because you are saying, it is time to file VAT, my management accounts are not ready, I have internal audit, I have external auditors, or I'm working on a budget. And in the same way, we also don't attend a lot of networking activities. I don't know how many times CFOs go. We say we have a dinner for say, your industry in which you will work, and the CFO goes to attend, or you have another activity, something. So you find that we are always into our comfort zone. We look at don't open up our minds to other things by attending networking events, because that helps us to figure out what is other people. So on the next slide, Peter. So when I was looking at this, I thought about a few critical questions, circumstances. For example, as soon as the COVID started, the epidemic, then we went into a lockdown, then the president asked for donations. So supposing your CEO or your board asked you a question and said, how much should we donate? What would you say? Then there's the question, what decision should we take on staff? What would you say? What amnesties should we take advantage of? Because these are already in place. URA has given an amnesty, which you have to apply for. NSSF has given an amnesty, which you have to apply for. Banks have given amnesties for deferring loan repayments, but you have to apply for them. There is also the saying that landlords should not insist on rent, but also you need all these people, we need to negotiate with them. We just can't take it for granted that it is just a given just because the government has said, because the relationship is unique. I know for sure, for example, there are a number of companies that have applied to NSSF for amnesties and they've been rejected, for example. So how do you know that you will be accepted, even for banks? How do you know that you will be considered? And also another thing is, how long can we survive if we continue under these circumstances? Now, most of those questions will go to the CFO because they have financial implications. Now, if you are not thinking 2 steps above your current position, thinking as a board member, thinking about what is critical, a question like Part D, how long can we survive in these circumstances, requires, it is a simple question, but it may require you 3 or 4 days of work, projecting cash flows, projecting incomes, projecting collections, trying to figure out where you can save money, and so on. And so if you've not thought about these on a regular basis, then you will be in a bit of trouble. And therefore you will look at the board, a board member will ask you that question and you have no answer, because for him, he's waiting for a very simple answer, 3 months, 6 months, 4 months, whatever it is. The moment you say, maybe 8 months or 6 months if we don't get money or what, then you are confusing them, because then they can't take a decision. So now, donations, how do you donate? For example, I've seen companies where, I think it was on TV, where the staff were rioting. The company had donated 125 million, I think, or so. And then they wrote to staff that under these difficult circumstances, they cannot pay them, and so they have to go home. So you can imagine such a dilemma. So the staff will feel, why did you donate in the first place when you can't take care of us? So then we've seen, I will also briefly talk about the decision on staff. The decision on staff is a bit complicated, but it can be guided. Number one, if you have staff, these are people you have trained. These are people who understand the business and have been working for you. If you say that you go home, they go home, then you will have to pay them terminal benefits and all that. And as you take them home thinking that when situations normalize, they will come back, supposing some of them don't come back, because you've told them to go, and therefore they will be looking at other opportunities. And if they get them, when you ask them to come back, they may say, well, I can't come back. So when the situation normalizes, then you find yourself in a place where you are recruiting, starting to train again, and the times are difficult, and it takes longer for you to recover. The second option, what I've seen some companies do, is that they've taken this period as a leave. So they are saying, okay, we will pay you, but these are leave days. Because a person is supposed to be getting money during paid salary during leave, and so this continues. That's one other way to look at it. I've also seen a question where somebody was asking that for them they pay based on attendance sheets. But if there are no attendance sheets, and that is the policy, then you may or approve of the relevant authorities to waive that, because to pay attendance sheets, then you'll be in trouble. But since these are unique circumstances, then you may have to apply for exceptions. If you don't get the exceptions, it may be difficult for you to pay. So the next question of the amnesties also is related to somebody who said that, who asked a question and said, how come government is not giving any incentives, is not giving anything to companies to ensure that they survive? I think this is what they've done for the time being. They've talked to URA, they've spoken to NSSF, they've spoken to banks, and I think that is what they've done so far. There is nothing as yet where they have said that we will give money to companies or soft loans or anything, because I think you'll appreciate that in the first instance, they don't have the money anyway. That's why they are asking for money. So if they're asking for money, how will they give out money? There was also the story of NSSF people borrowing, getting some of their savings, but NSSF mostly invests in treasury bills and treasury bonds. And so if you are saying that give us some of the money, 20% of they are talking about of the 11 trillion is about 2.2 trillion of member savings. So that means the NSSF would have to go to Bank of Uganda and liquidate 2.2 trillion. And Bank of Uganda has borrowed on behalf of government. So now government has to look for that money, and government doesn't have that money. And so we just end up in the same place, because as you may be aware, NSSF is restricted chances. So how long can we survive? Again, that is a here and there. Are you still getting some business? When the lockdown is lifted, how quickly will your customers revive their businesses and continue to operate normally, so that you continue also supporting them and giving them business? How much cash do you have if you took the assumption that we will just continue with just the funds that we have? And also, what are the if say you are a bank or an insurance company, you are regulated, and there are certain ratios, there are certain funds that you have to keep in place. So how will you then keep those in touch, because you have to stay compliant? If we go to the next question, next slide, Peter. So to be able to answer some of those questions, as you've realized, CFOs need to be rounded players. So you find that we have to go beyond just giving historical information. We also need to understand where the numbers are coming from, so that we, just back to the previous slide, Peter, we have to understand where the numbers are coming from, so that we understand exactly what we are doing. So therefore, we need to be proactive, as I mentioned. Somebody asking you for how long we can survive, and you say, I need 3 days to give you an answer, gives an impression that you may not actually know your business. And incidentally, we are always taken as CFOs to say that we must have each and every number in our on our fingertips. So every time you say, let me look at it, let me find, then the question always that comes to mind is, who prepared these financials? Oh, we prepared them. Did you look at them? Yes. How come you cannot answer? And that becomes the problem. So we have to be very, very proactive so that we understand, we are able to understand and contribute to the strategy. That helps us to understand where the numbers are coming from. But also we have to take advantage of our systems. And that is the whole issue. So we have to be able to say, with the technology that we have, however simple the system may be, Tally, QuickBooks, whatever it is, we need to see how to take advantage of it so that we get as much information out of it as possible. One was asking, how do we have the accuracy of the taxes filed, supposing hard copies are not available? The good thing is about taxes is that they don't need the hard copies. If you can take advantage of your system in such a way that you can file, you can get the details and file, then it's okay. If the hard copies are in remote areas, for example, you are operating countrywide and the system is manual, then you have nothing to do. Then therefore, that means that will have to wait. But whatever is available, in my view, I would rather report that and show that I filed. And then I will recover later and say, this is when I got the information, because at that point, I had no information that I'd solved. And so you can always take advantage of that. So the hard copies, same thing. If you can take advantage, then that's it. So we have to embrace evidence-based decision-making. So what I mean by that is that twofold. One is that the answers that we give to the questions we are asked should be as a result of evidence. So we need to have the evidence, clear assumptions, clear figures, which are based on some facts. And then we also have to go away from historical reporting so that we give future information about the future. Because if you are saying, fine, this is an income statement, we are below budget by 30%. So what does that mean? So you've given historical information, but then what decision should be made on that information that we are 30% below budget? So we need to think beyond that and have something to show and help the decision makers take the right decisions. Next slide. Is Peter there? So on the next slide, I was trying to talk about the relevance. How can we be relevant as CFOs for the future? Because now what we are talking about, from what we've seen, the kind of questions we get are no longer historical. They are futuristic and they involve business decisions. And so we need to understand what creates value, what creates business value. And therefore, we have to understand the business model. You may be, for example, two banks, and one bank is saying, I want to just go and give out personal loans. And another one is saying, me, I'll go to corporates and give them loans, companies that want to borrow and so on. And other people are saying, for us, we want to finance infrastructure projects and so on. So you need to understand the model. What is the model of the business? How do they think that they are going to make money and create value both to the customers and to the shareholders? And from that business model, you need to embrace the mission, the vision, and the values. Because if you don't live those three things, then your business model is likely to collapse, especially if they are not in line with the business model. The next thing is that we need to be able to measure that value. Are we really creating value? That's where performance management comes in. And performance management is a very big thing because now it's numbers, but also other non-numerical, non-financial data information. For example, how do we measure customer care, customer satisfaction? How do we value addition? How do we how do we understand our image? How do we understand our culture, how we do things? So because all those things affect value and other issues like image. So we also need to contribute to minimizing business leakages. One of the things I've noted in my career as an accountant is that sometimes we have instances where we go for businesses that are actually not profitable. And that especially took me back to the idea of the blue ocean strategy. Because when you are fighting in the marketplace, you fight a lot, and the marketplace becomes so black. It may take it, but may take it at a loss. So you find that you are giving out too many concessions. You can imagine, for example, now we are saying, let's supply beans to government. Just imagine it was a normal customer, and this is too much business. And then somebody says, okay, beans are 3,200. Then another one comes and says, okay, I'll give you 2,900. Another one says 2007. Another one says 2006. Then the next thing you are doing is you are supplying the beans at 2,200 shillings. And by the time you buy them, maybe at 1,800, and take into account all the logistical issues of cleaning them, of transporting them from wherever they are, bagging them, and so on, and supplying, plus the cost of waiting for government to pay, you may find that actually at the end of the day, you've created no value. And you find that, so as CFOs, we need to be able to demonstrate that at this price, at this deal, however big it looks big on the revenue, but it may be worse. And I've seen many instances of that, where a person says, it doesn't mean that because you've doubled your income, you'll double your profits. And you actually wonder why it's not the case, because some costs tend to be fixed. So if I earn more revenue with the same fixed costs, the way we are taught in accounting and management accounting, cost accounting, it means that the variable cost will be the only one incrementing, and so profitability will increase. But how come in real life, when we double profit, we double revenue, profits doesn't increase necessarily that much? So next slide. So to do that, I think we need to work on ourselves as CFOs, because we need to be believable, we need to be seen in the marketplace. So we need to market ourselves, number one, personally, through branding. I don't know how many of us try to brand ourselves. We need to have emotional intelligence. Finance people, we have been accused of being too rigid. You can imagine, it's normally the CEO who says, yes, I know the regulation on salary advances says that nobody should exceed 30%. This person has already taken money, but is in a critical situation. I think we should give him. As a finance person, we hardly do that. We simply say, you've already taken, go home, find out other means. And so we don't have a bit of that. But also, of course, we have to be performers. So we have to up our performance so that we are recognized. But most importantly, we have to think strategically, understanding the business models, as I've said, understand what drives value, and be able to participate fully and possibly control the performance management system so that it gives us the data and information that we need. Of course, we also need to work on our presentation skills. We also have to work on our relationships with others, because it is through relationships that we are able to do well and also succeed both in life and in our professions. Thank you, CPA Mark. I think those are the comments I wanted to make, but most importantly, the emphasis I was trying to make in this presentation is that such circumstances present decisions. So we have to keep on our toes and keep thinking like business people, keep thinking for the business, keep asking ourselves questions and look for the answers. Or if we don't have the answers, put systems in place that will give us the data where we'll get the information that is needed to make those decisions. Thank you very much.
Thank you very much, CPA Paul Mwanga. You've actually summarized it very well. I think one of the key messages you're making is that to survive this crisis, the CFO and the members of the finance team should have been working on themselves in terms of understanding the business, understanding the strategy, the business model of the organization, becoming advisors, trusted business advisors rather than visual number crunching. So in a sense, you're saying these are skills, values, and attitudes we ought to help you for a period of time to enable us to provide relevance and value at this particular critical time. And we thank you very much for your presentation, for highlighting all of those aspects. And I think you have armed the participants on how to approach the problem they should be grappling with right now. The number of questions that are still coming through, and as I advised earlier, please post your questions on the Q&A function. Once the presenters have gone through their slides, we should be able to come to your questions and try and respond to as many of them as possible. I already indicated we might not have time to receive the questions directly, so please make use of the Q&A function, because that way your questions will then get the responses they require. Okay, so thank you, Paul. So we'll now move back to Albert. Albert had already gone nearly halfway with his presentation before he had a technical glitch, but it should be able to come on now. Albert, can you hear me?
Yes, Mark, I can hear you.
Perfect. Okay, so let's have your slides back on, and you can pick up from where you ended. I told the participants that when you left, you told us something interesting about a business resilience plan, and you're trying to explain how it differs from a business continuity plan. So you left us hanging. So please pick up from there.
No, I think the issue of the slides, I don't know what has happened now, the phone. This is kind of a contingency plan. I'm using the phone for communicating now. So now I was talking about the business resilience plan, which is meant to take into account how long indeed a business can survive a very long and multifaceted disruption. I think that's what we are saying, compared to an isolated incident where a building, for example, let's say Crescent Towers collapses, then you may find the people who are there can resume business in that place. But this is a disruption that is affecting many people in the same country, but also worldwide. So you go to the next one, next slide. Number 7, yeah. So we're on number 15. So we're saying that these resilience plans are not common, but this COVID has taught us for a similar situation can also be localized to a country. So let's not think in terms of pandemic, but it can also be an epidemic affecting the country. Then I think what we finished about the post-balance sheet, what has happened in the last 4 months. So the CFO should need account. Then, of course, some of these reports from the CFO also need to include some narratives, and if possible, comparative information, industry information. So if you are a CFO in a bank and you are talking about implications of lockdown measures on revenue, if, for example, it is information from the industry, then you can also capture it in your report. If you are in manufacturing and the lead time to get materials is 4 days, what about other competitors? How many days are they doing, and how can you improve yours? Then regarding tax, definitely CFO comes in here as well, in that some of the decisions, I think someone was asking the question about donations. How much should you donate? Remember that donations are not allowed for tax purposes. So you have to know that after donating, that means you get tax break on it. So the CFO should be able to guide on that issue and tell them about the tax implications. Of course, eventually, the CFO will be one of companies learned to report as the company. What has the organization learned in this year arising from this crisis? And that those lessons can become critical for going forward in doing the next business plan, maybe for next year, or even a strategic plan for the next 5 years. So that's what I think the CFOs can bring to the board. Over and above what they've been doing so far, they really need to now step up the game. And as I said, depending, even in your own small organization, you will still be able to provide value. Whether it's a large organization, the CFO can still add value. Even in government, we have a number of CFOs, districts, local governments. They should not think that this is only for profit-making organizations, but even them, they are going to face challenges in terms of cash. As you can see, government is definitely short on revenue, and we are looking to borrow. Government is looking to borrow from IMF, from the local market, is seeking donations for the fund. So there's going to be shortage of cash. So at the district level, the CFO should prioritize activities to ensure that the critical ones continue, and then others can be postponed maybe to the next financial year. But of course, also Public Finance Management Act, you need to know that what's the law saying about unutilized funds. So all those things the CFO can help provide that leadership. Otherwise, thank you, Mark. I've seen a number of questions. I'll try to answer some of them online, but I'm available to answer others verbally. Thank you. Hello, Mark. Back to you.
Thank you, CPA, Dr. Albert. Thank you for that very elaborate presentation. And I hope that the attendees were able to piece together what you said at the start of the session, together with what you have concluded with just now. So this leaves us with nearly 50 minutes to address the questions that have been coming through, and there are quite many. Please keep them coming. So what I'll do now in the next few minutes is give each panelist maybe 2 questions each, receive the responses, and then we'll walk through the questions as they come. So perhaps this is for Paul. Paul, Dennis Mwonge says he has been seeing CFOs getting more involved in strategic thinking, away from the usual financial reporting. So his question is, what are the key strategies with other key decision makers within the organization, for example, the chief operating officer, in order to address the crisis, the coronavirus impact in the long run? And then again for you, Paul, CPA Charles Kiza asks the question, the finance function is essential, is also very essential. What's your take on how their voice can be raised through this crisis, so that there is more awareness about the crucial role that finance professionals can do to support businesses. For you, Albert, and I think you tried to respond to this question in the chat, but I'll ask it again. Amidst this uncertainty relating to COVID-19, how best can a CFO carry out stress tests and projections within the organization? And then I'll just walk through the questions down here. There's a very broad question from Nelson Mobangizi, and his question is, how can organizations recover from the negative impacts of the pandemic? So those are 2 questions for you, Albert. So Paul, can we start with you, please?
Okay, thank you very much, Mark. Now, I was deliberately trying to avoid specifics in my presentation because the variations are very many, and I'm seeing that reading through the questions, this is what is coming through all along. It may not be very easy to answer each and every specific questions considering the time we have, but I'll try and be and maybe tackle these 2 to demonstrate a bit of how we can do it, because both of them touch on I think what I called emotional intelligence, a bit of our ability to influence others, and also to also demonstrate that we know what we are talking about. And to me, both of them point to the thing of evidence-based decision making. Because if we are going to be involved, we are involved in strategic planning, yes. So supposing, say, a marketing person comes and says, yes, we can double our revenues, that's fine. But the issue is, where is that assumption coming from? Because it has to be backed by some evidence. We are going to get business from here. We have these leads. We are opening new markets. We think that there is this good dealer that we are customer that we are going to work with and is very big, or we are improving efficiencies like this, distribution channels and things like that. And so we have to be able to question and make sure that we are demonstrating that it's not just about throwing issues into the air and they are adopted, there has to be a basis. And also, it's the same way on the side of, say, expenditure or business decisions to be made on a day-to-day basis. It's also the same. We have to be able to show and demonstrate that what we are talking about should be backed by something. And the moment we keep asking the relevant questions, if we are brushed off, but then we show that now later things have not worked and we ask for the reasons, as to why they didn't perform the way they thought they would, or things didn't turn out as had initially been thought, then you'll find that later on we will start being respected in the way we approach issues. Because if you demonstrate with evidence and you are able to get a result, then you show that my result was based on some evidence before. That's why I was successful. Or two, if it doesn't work out, because don't forget that a strategy is always a hypothesis. If I take you back to research methods, it's just a hypothesis. It's just an assumption that when I do this, things will be working out the same way. So the way we do research and test a hypothesis, so when we start operating, we are also testing the strategy. And if it doesn't work, we should be able, therefore, to test our assumptions. Now, if we had no assumptions and we had no basis, then we have no explanations. And then we are learning nothing, and then we can't make decisions. So it becomes very important. But also, as we combine our evidence decisions, we also have to do what I call networking, influence, talk to these people, show them things. Nobody wants to be surprised in a meeting and say that, can you imagine every time we get into a meeting, Paul asks so many questions and trashes my suggestions. I don't think I want to be in that meeting with him. So you find that you can always get to people, they get to know your thinking, and then you say, let's discuss. When you have something, let's discuss, let's do this. And sometimes you let go. And then when you get out of the meeting, you talk to the person. You say, okay, this is a good idea, but if you had brought it like this, show that, then and it's about consistency. You find that it becomes very easy in the long run that you'll become a go-to person, a person where ideas are bounced. The experience I've seen that as an accountant, I have the largest number of information in any organization I've worked with. I have information that people don't have. I just siphon out what people need at that particular time, because it's also not useful bombarding people with too much information. But I try to sit, think about, get scenarios and do what. And then later on, when somebody is asking, when you are explaining, you actually show them with some figures. And so it becomes easy. So dealing with these stakeholders, I think we need to show our professionalism, but we also need to show our evidence, but also learn to work on the soft parts of dealing with people, so that we are not seen as people who just trash everything. And so that is the same thing with raising our voices. We need to show people what is happening, and we need to pull them on our side. Because as long as we keep talking and people don't listen to us, however much the information is useful, as long as it's not put into practice, then it's like we will all fail together. Because you fail as a management team, you don't fail as a CFO. So if as a CFO you can contribute, you have to learn to pull people slowly to your side, that they start listening to you meaningfully. I think that's what I can answer regarding those two.
Thank you very much, Paul. As you've elaborated, very important to use evidence. You're rightly put it, the CFO sits on the largest amount of information in the organization. You're the custodian of this information. Use it and support the business to make the right decisions. Dr. Albert, for the questions we directed to you. Yes, Albert, can you hear us?
Hello, yes.
Okay, perfect.
Yes, I'm back. Okay, so dear members, there was a question about stress testing and projections. So these projections are more of budget by what you plan to achieve in the year, let's say 2020. So you find that normally these budgets are done previous year, let's say November. So you have projections, and these projections are based on the information that's available, including, of course, some people use the incremental budgeting, so they expect increase in revenue, increase in costs. So those are projections, then they're broken down month by month. So I believe that the CFO somewhere has these projections, which were there at the beginning of the year. But now, as we have done 4 months, a CFO would have the latest actual information. For example, you may find that the pandemic started in January. Already some travel had been curtailed in China. So the CFO should be able to see what has been the impact on revenue. Then you look at Feb, also you do the same. March, April. So if I take an example of a hotel, for example, you may find as of now, the revenue is reduced by 100% or near there. But maybe in January, it had reduced by 10%. So these projections are the ones which are now being impacted by the pandemic. Then when it comes to stress testing, is where you are trying to say, what if, in this case, what if the pandemic continues up to end of December? So it is expected that the CFO should adjust the projections, first of all, using the current information, then stress test it and say, supposing it continues up to the end of June, supposing it goes on September, December, what is going to be the bottom line? Remember that there are some costs which are fixed while others are variable. So you find that some of the employees are being paid. Those are fixed costs, notwithstanding that no revenue is coming in. So you can imagine a hotel which has no visitors, has no conferences, has no restaurant, has no bar, but the salaries have to be paid. So now you will be able to see through stress testing how the bottom line is getting depleted. And when it goes beyond small, and the company will definitely collapse if it continues that way. So this stress testing helps you to advise management on when some difficult decisions have to be taken. And indeed, we have seen that some companies have decided to lay off staff. Some companies have cut their salaries because they're actually seeing from stress testing that the situation is getting worse and worse. So I think that's what the CFO can do. If you are, for example, in the NGO world, NGO, some of these donations are coming in, depend on donors from abroad. And so you also be able to see that some of them are going to be impacted. You can talk to your donors. Is there money coming in? If not, then include it in your revised projections. So that's what I can say. Really, it is an ongoing exercise. And stress times or those which are related, but I believe every business organization should embrace this modeling. So, Mark, so in terms of am I now in the second question?
Yes, yes, please.
So about recovery, definitely we don't have the information clearly about companies that have gone down. But if there are any organization, because as of now, they are just shut down. Their offices are closed. So you can't tell whether the company has collapsed or is still existing. But in case somehow after lockdown is lifted and they continue, then they will have to now, the CFOs to help the company see which areas have low hanging fruit in terms of where can we get revenue quickly to at least be able to survive another 1 month or 2 months. Because one may not be able to really project too much into next year, but because at the same time you don't have market information in terms of where your competitors are standing, where your staff members will come back. So as of now, you will have to look at recovery in the near future, like this year, 2020. How will you recover from the pandemic once the lockdown is lifted? You have to collect all the revenue as much as possible. Existing items or contracts must be concluded as quickly as possible while you are thinking of the medium term. But in case, then the owner, so if you are an enterprise, you have to find out there are avenues for accessing affordable capital, either debt or equity. Because definitely, if you continue incurring costs while revenue is reduced, most likely you are going to be making your bottom line will be negative every month. So I would think that the recovery process will have to be tailored for every organization. And indeed, a number of CPAs can be able to jump in to help the practicing CPAs can be able to come in and help some CFOs and provide independent advice. Since they are independent of the organization, they will be able to be showing true and more objective advice. Sometimes CFOs may be ignored based on what they are saying by the CEOs. But if you that advice be stronger and action has to be taken, otherwise the company may not recover. Thank you.
Thank you, Albert. And staying with you, I'm going to give you 2 more questions to respond to. One is from CPA Francis Molene, who is asking that there are predictions out there that this recession could go up to the 3rd and 4th quarter of this year. So essentially the rest of 2020. So what is your advice for practitioners, being a practitioner yourself? How are you coping, and how should practitioners stay afloat through this crisis? Then the second question I'd like you to address as well is one from, I think, Patricia Nawire. She said when she looked at the companies were either not planning or not sure or how to deal with business recovery. So she's asking what could be the drivers of this behavior, but I suppose more importantly, what should they do?
Okay, so this second question here, we said business resilience planning is something which most organizations did not have, and only few. So it's the CFO, in case they have CFO, should be able to lead this process, whereby they step by step and say how is the company going to recover. You can even come up with a timeline of 1 year, starting with, of course, the next up to June, then Q3, then Q4, then 2021. In each of these, you have to discuss with the owners of the business or the stakeholders. Suppose provide information for decision making, but the decisions may be taken by some other people. So he just needs to put the things on paper. Then where the organization does not have CFO or people with finance skills, then they can hire someone to do that work, because it is important to make a decision. Because you may find some companies may not be able to recover at all. I think you have seen in some cases, even large organizations like Virgin Airlines, which is almost collapsing. We have challenges, of course, Kenya Airways and airline businesses. You may find some tourist companies may fail to recover because maybe tourism might resume in 2022. So you may find that it may be hard to recover in some areas. Now, regarding the practitioners, definitely these professional accountants who are practicing depend a lot on clients, and we know that most of their revenue predominantly is even for the big four. You find auditing tends to be a big chunk, but it's more for small and medium practices. Then you have consulting services, and then of course tax services. So you find that auditing, in order to comply with, require you to be at the client space to look at the audit evidence, and also, of course, to discuss with management or those who are charged with governance. So because of lockdown, both in terms of social distancing and non-essential services, the auditor is not able, the practitioner is not able to do this work. The same also maybe with consulting. So indeed, definitely, in terms of revising projections and the stress testing, all the practitioners should do this for their firm this as quickly as possible, to then be able to see how indeed it is going to be impacted. Because it's very clear some of the clients are not open, and some of them indeed, one, they may not even be able to afford to pay the fees. Some of them will not increase the fees. Some of them are unavailable. I think we have seen Uganda Clay's audit not completed, NIC audit not completed, AGMs not completed. So indeed, it might also affect your ability to collect your fees if assignment is not completed on time. So I would suggest that the practitioners need to do this kind of revised projections quickly. And that helps you to see how bad the situation is. Then from there, you need to take decisions in terms of your staff. You also need to take into decisions in terms of suppliers, especially landlords where you are renting. You are not seated in the office for 2 months, 4 months, but you are required to pay rent. So you need to go and negotiate with the landlord and agree what to do. Also take advantage of your the banks. So that's what I would recommend for the practitioner. I think everyone might have a different experience, but those are general guidelines.
Okay. Thank you, Dr. Albert. Paul, let me bring you back in again. There's a question here from past President George Gadu, and he asks, COVID-19 is a global health, economic and social threat. Most businesses extract from it so that they survive, and once the crisis is gone, can thrive and probably get out of this even better. Then the second question is a series of related questions. They touch on essentially SMEs. and many of the participants are asking. A number of organizations have been hit financially quite significantly. So especially in the context of an SME, how should they deal with the situation? And I'm cognizant that a number of SMEs are your clients of your organization as well. So it'd be interesting to know the kind of discussion you're having with SMEs and the sort of advice that you are providing to them to weather through the crisis, whether it's challenges to do with human resource, finance, and the like. So Paul, if you could have your insights on this.
Yes, thank you very much, Mark. I think I will try and answer the two. My answers may interlap between the two. Now, the challenges and opportunities. Of course, one of the biggest challenges that is facing businesses now is business continuity. Because for many of the businesses, there could still be opportunities to make money. But the issue is, how do we continue making that money? You can imagine, even when the spare part shops were closed or the mechanics were told to stay at home, there were trucks that were still breaking down on the road. There were vehicles that have stickers that needed repairs. So how could somebody, if you are one of those categories, how would you take advantage of such a situation? Because yes, there's a lockdown, but business is still there. So the challenge is to say, how do I get or continue to operate in these circumstances? You may not get as much as 100% of what you are getting, but if you are able to get at least 40, 50%, 30%, it's better than nothing. You will still be able to at least get something and then survive a little longer and weather the tide. And so related to that, therefore, is that once you figure out ways of surviving, then you may find that it brings you other opportunities. Maybe a cheaper way of doing things, maybe ways of reducing costs, maybe ways of increasing efficiencies. And even when the lockdown is lifted, you find that you still have now this extra way of getting clients and be able to support them. And so it could also bring some opportunities. You can find now that there are so many businesses. Look at possibly food vendors. Some of them are busy delivering now money. I mean food. Before we were looking at Jumia and it was not very important and so on and so forth. But now people are even calling directly to restaurants and so on and getting money. So even after the lockdown, you may find that that avenue can still continue and it becomes another revenue source. And so the next thing related to that is that in these circumstances, one of the challenges is savings. And that touches a bit on the second question. We are saying that we are hit financially. At the end of the day, cash is king. The person who will be able, or the organization which will be able to, one, preserve their cash and will be able then to stay longer, and therefore is more likely to survive and then recover quicker. So if we get ways of savings and then we can do business, supposing a business is able to do, say, 80% of the business it was doing before under these circumstances with fewer costs, what would make you go back to the to the old normal when situations become normalized, efficient. So the idea is to sit down and look at yourself and think through them. Number one, cash is king. Number two, how can I continue making some money even in these circumstances? Because to say that we've been told to sit at home and you sit at home does not do much. You'll just be eating into your saving. Number three, how can I save on costs? And that is the same thing maybe to add on what Dr. Patrick said. The issue is that we have to think of ways. Say, as a CPA, yes, some offices may be closed, but some people may have systems they can access remotely. Can you get some information on mail and do some of the audit? Can you get some of the schedules on mail? At least do some work, so that even if, say, you are not paid in this time, after the lockdown, you will have much less to do. It's only what you need to see physically or what is not possible to show you by email or something like that. That's the only thing that will be remaining. And so in a short time, you'll complete the assignment and possibly get paid. Because many firms are doing a bit of that. I've seen that. So the idea is, like I've always emphasized, look at your particular circumstances. But the three guidelines is, how can I make extra money? How can I make savings? And how can I continue serving my clients? I think those are the key issues to think about at the moment. Thank you, Mark.
Thank you very much, Paul. And thank you for those elaborate answers. Dr. Albert, I'll come back to you. There have been a number of questions from the NGO sector, from the not-for-profits, and really to paraphrase the questions, they're asking, how do they survive? I think you did touch on some of those issues through your presentation, but perhaps you could throw a bit more light. There are worries about funding, donor funding, whether or not it will come. The sustainability issues, certainly. So the situation for NGOs seems to be particularly dire. So what are your thoughts on that?
Okay, thank you. So definitely the NGO will have a challenge of forecasting properly, because their income is based on the capacity of the donors also to provide an allocation. So if we take an example of, let's say, NGOs which are funded by USAID, if USAID funding is curtailed because of the need to divert maybe some more money in the US economy, then indeed they will reduce. So in that case, the CFO needs to be aware of those threats and communicate to the donors to be able to see in the next 6 months how much of the earmarked funds will be coming through. If, for example, the CFO is informed that 50% is likely to be the cut, then at that point, the CFO and NGO can adjust their activities to be able to fit into the revised income. Because there's no way an NGO can continue operating when there's no money. So they can only curtail the activities, and in their reports, I think they can say, we were not able to accomplish our plans. Once they improves, then they can come back to making organization. At the same time, it cannot continue to have deficits in terms of its money. It cannot continue definitely. So if there's need to take tough decisions in terms of scaling down operations, then you have to do it. If you have to reduce the number of staff, you have to reduce. If you have to move to cheaper premises, then the NGO has to do that. So, but in any case, the needs to provide that information so decisions are taken. Hello? But then I think there was a one which was sent earlier. There's
Yes.
one where an NGO about timesheets. So indeed, I think someone had touched on this one. A timesheet is filled in after you have completed a task you have been given, especially in field-based activities. Someone goes to the field, probably NGO, even for CPAs, we have those timesheets. So because of the lockdown, indeed, these people are unable to go to the field. So they have not worked. So if you have not worked, you cannot fill a timesheet. So in that case, what we can say is that these are people who have also been affected, just like taxi drivers, boarders, saloon people who they work and then they are paid. They work, they are paid. So then they have to wait until when the lockdown is lifted. And then they can now do that work which was postponed. They put fill in timesheet and then they are paid. Otherwise, the way it is now, you can't just pay or you can't fill the timesheet with hours which are fictitious. Then, but yet the work is still outstanding. Then you end up paying twice or thrice. That's what I would submit.
Thank you, Albert. We're sort of running out of time now. Albert, I have one last question for you, and it's really just to take stock of the current situation. Of course, you have consulted and provided advice to a number of clients, and really been at the forefront of supporting the different businesses that you provide services to. So the question is, what lessons have you learned? What have you picked through this entire experience? Partly personal, I suppose, but also from a professional side of things.
Yeah, of course, there's a lot of lessons that have been learned, not only us, professional accountants, but everyone, indeed, governments, both in Africa and all the world. People are caught unaware, and now they are just learning on the job. So that is one thing which definitely each of us is learning. So what I am seeing here is that the lockdown, first of all, a pandemic of this nature, which spreads across the whole world, had not been experienced in the last 100 years. So it is a very unique situation which happens maybe once in a lifetime. Because the other epidemics like SARS, we didn't have any case of SARS here in Africa or even Uganda. So we have now learned that a pandemic is something very serious, but it takes long. It is what we call a high impact or catastrophic event, but it occurs very rarely. It occurs very rarely. It may happen again in the year 2200. So then secondly, lockdown measures which affect the entire country, a number of supply chains can affect any business. Just a few might benefit, but it can affect many businesses, both small, medium, and large. So what we are saying is that we have learned that we need to prepare business resilience plans. It doesn't have to be a 200-page document, it can be just 10 pages. A very clear articulation of your revenue streams. Because the main threat as of now is that the income of businesses and organizations is under threat, including government. Taxes are reducing every day. So income side is the main threat being faced. So how do you build resilience in your income streams? Through diversification, through innovation. So those are the things which we are learning. Even the business resilience plan is something new. And so if someone does not know how it is done, should not be what I would say we have learned.
Hello, Albert. Thank you. Thank you very much for the response. No doubt you are reminding us that we need to pay attention to our business resilience plans. You're reminding us that today we have the pandemic as the sort of disaster or the crisis. Tomorrow's disaster or crisis will be something different. But if there's anything we've learned, is to think and prepare for all of these situations. You've emphasized the importance of thinking about our revenue income streams. To be more innovative, this is a time to think outside the box and really to find new strategies to ensure that your business and your organization is able to steer through the crisis and recover. So Paul, the last question goes to you, and the question is now sort of forward-looking, because you've really emphasized to CFOs and finance professionals generally that we need to become more, we need to be forward thinkers. That's the only way we will survive, but it's the only way we'll be relevant. So what does the future look like in your seat as CEO, MD of a large insurance company? What are you thinking? How do we come out of this? Do we come out of it? Do we come out stronger? What does the future look like? Help us paint that picture.
Thank you, Mark. I think one of the things that will happen is that the future may change, but the fundamentals will remain the same. As I was listening to my co-panelists, thought came to my mind, and that is the idea of simplicity in everything that we do. And a thought came to my mind about a person in the market, or what are they called? These hawkers. How do they make their decisions? Because these people are very agile. A person goes to the market, he's buying matoke from the lorry, from Masaka or wherever it's coming from. He knows how many bunches, he negotiates a price and starts selling. And you will find that people will come and buy the bunches at different prices, but at the end of the day, they'll make money. And they know. And as time goes on, they know that it is 3 p.m., 4 p.m., 6 p.m. They change the prices, and so that they don't make losses. And these are the kind of things we may start to start thinking about very, very critically. Quick decision making, because we have gone through class and we have all these models and we have all these things that are taught to us. We spend a lot of time. You can imagine if, say, we are talking about, say, a change in price, look at, say, lending, say in a bank. A change in interest rate may start with from the risk committee to the finance committee to the management committee to the maybe risk and liability committee of the board until the board, and then the board says, okay, you can change. But how much time has passed to make that decision? So many opportunities may have passed us. So you find that in future, we may have to start thinking very, very fast, be on our. Also, what is being shown now is that cash is king. The organizations which now have a bit of money to survive longer will be the one that will weather the storm and possibly get back on their feet much more quickly. But also, the organizations that are able to continue working in such circumstances will also be able to survive. And so the idea is that we need to think very in very complex situations. We need to bring the one of the things is, like I said, email, WhatsApp, SMSs, Facebook, Twitter. All these things are available channels. Now we have Zoom, we have TeamView, we have a team, and all these other video conferencing and things. So we can still take advantage of them. All we need now is a bit of data and a bit of airtime. And possibly when you have data and airtime, there are many things that you can still do, even in these circumstances. So the future will be, we need to be able to take advantage of those, and not as opposed to saying, you see, my office is locked, so I can't help you. Please wait until tomorrow. I think that question, that answer will become less and less acceptable. And soon we'll become 24-hour workers. And it will be very difficult to separate work from office. I think those are the key things about the future: simplicity, business continuity, and cash. Those will be the key things. Thank you very much. Yes, Mark.
Yeah, yes, Paul. Thank you very much for the response. As you are making your response, you talked about a vendor, and I thought about that lady who got presidential recognition, the one who sits under the mosquito net. But I think the one of the crucial things you're telling us is to be more agile in our thinking, to broaden our skill set in a sense. We as CPAs have solid finance, accounting, knowledge and expertise, but that this needs to be applied to a business context. And I think you're really advising us to try and build this business acumen. We need to think about the entire business. We need to walk away from our sort of working in silos, and consider business impact on the entire organization, and how that affects strategy and the various decisions that have to be made within the organization. And of course, as you already earlier mentioned, the CFO has that information that aids this decision making. So thank you very much, our facilitators, CPA Dr. Albert Otete, together with CPA Paul Mwanga. I know for myself, I have learned so much. I'm definitely very different from how I came into this webinar. We have hopefully understood better how to strategize for our businesses through this period, and also plan for recovery, and how to manage through a crisis. And these experts here have shared a lot of insight on the various things you can do to survive and thrive. I want to thank all our attendees. Thank you for your very active participation. The chat has been very busy. There have been so many questions and answers. Hopefully we've been able to answer most. For those questions that we unfortunately didn't have time to respond to, we will find a way to provide responses to you directly or through a question and answer document write-up that we'll prepare with the aid of the facilitators and share with all the participants after this session is done. A number of you were asking about Mr. John Bosco Ntangari has confirmed these slides, all the slides that were shared through this discussion will be available to you. You'll also receive a CPD certificate as evidence of the CPD hours that you have obtained. Thank you very much. This webinar will come to an end now. Look out for our communication on upcoming events. We hope to have quite a number of these over the coming years. Stay safe, stay strong. Your different organizations need you, and we hope that you can support them at this difficult time, and we look once this whole situation has passed. Thank you. Enjoy the rest of
Thank you, Mark. Thank you, Paul, and all people who logged in. You can see that we are working from home.